Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. So let's try to look for decent trading occasions, but unfortunately today we don't have a lot of them. Actually, I would say that we have 3 or 4, and I'm inside of 2. I have 2 positions open. Both of them are profit right now. Yesterday I had 3 positions, one ended with a loss. Ended with a loss because Australian dollar got significantly weaker overnight. Actually, to be honest with you, without any data. And because as you can see, Wednesday overnight we had Westpac, consumer confidence, investment lending for homes, home loans, and that's minor data. That's never data that cause any volatility. And yet, Australian dollar is much weaker right now. We have also another influence on this, so escalation of trade wars overnight. So Trump, US will impose new tariffs on Chinese goods, and Australia is a big partner of China. China is the biggest trading partner of Australia. So this also caused the weakening of the Australian dollar. But to be honest with you, well, I heard better explanations in my life. So, and I'm not saying that because I had a position there. I'm just, surprised about the scale of the movement on euro to Australian dollar. But obviously, I have no regrets. If you have regrets of trading, it means that you were not confident about opening this position at the very beginning. And I was totally confident about this because that was just a beautiful setup. Technical setup on the market. So we already had a speech from Mario Draghi today, but we are waiting for the Canadian dollar in for the Bank of Canada in 5 hours. We also have a speech from Mark Carney, and one of the setups I have is on Canadian dollar, but if there is a Bank of Canada today, I would be extra careful with opening position on Canadian dollar because you may get burned. Because it looks awesome from the technical point of view, but fundamental analysis can crash this setup. So you have to be extra careful when trading that. Anyway, let me start. So I'm having a buy position. This is a different account, so you don't see it. I have a long position on euro to Japanese yen, which is already on profit. And the position is based on the situation on the daily chart. So what do you have here is a long-term uptrend. There is a flag. There is a breakout of the flag, come back above 38.2, come back above the horizontal resistance. And that was a buy signal for me. The price had nice 4 bullish candles. Well, that one was nice here. This one initiated a reversal. But we are still relatively high here. My original stop loss was here, now it's here. Hopefully this correction will stop here and the price will bounce from the blue line and go higher. I will think about maybe securing my position. I think my buy order is somewhere here. So we'll see how it goes. Sentiment is in the long term is positive. In the short term, we can have a short term bearish correction, but we will see what will happen. Euro to Australian dollar. This is the setup. So my setup was based on the daily chart, H4 chart, daily chart with a drop, and then a flag, then a breakout of the lower line of the flag, head and shoulder formation, breakout of the neckline, breakout of the horizontal support, everything was there. Fortunately, the price was unable to break this horizontal support, created 2 hammers. I traded here after this bearish engulfing, so there was a hammer bearish engulfing. So I thought that this bearish engulfing, which in addition to that bounced from the neckline, that this bearish engulfing cancelled this hammer. We had a drop. The position was on profit, but then the price reversed. And even here, that upswing could have been expected. Double bottom formation, defense of the support. We had an additional factor, so fundamental factor overnight. Here, boom. Now the price cancelled this and show the formation, and is a good way to make new highs. In the long term, that would be an awesome trade because that is a left shoulder head and a right shoulder. Potentially, if the price would break this line, we could expect a massive drop, a huge profit, really. An awesome trade. Anyway, it didn't work out, so this is cancelled right now. The setup I wanted to show you is Canadian dollar to Swiss franc. So we had a drop. We had a correction of this drop, and this correction retraced 38.2% of the downswing here, and stopped on 38.2. The price was unable to break this 1, 2, 3, and instead of that they broke the lower line of the correction. And it does not matter how we will name this correction, because you can name it a flag, for example, like this, where the lines are parallel, or it can be like that. So it's a wedge. It doesn't matter because what counts here is the breakout of the lower line anyway. So the breakout, the price bounced from 38.2, broke the lower line of this flag. The next candle after the breakout has lower lows and lower highs, which means that this breakout is legitimate. And here currently we do have a sell signal. We do have a sell signal here. Stop loss 60, 30, let's say 40 pips. Potential take profit 150. In terms of the risk to reward ratio, it's an awesome trade. Why am I not I'm not opening this position is the fact that we do have Bank of Canada in 5 hours, as I said, and the outcome of the statement and decision is unknown, which and hawkish Bank of Canada can spark a bullish reaction here, and you can, even with high volatility, you can end up with even with a bigger loss than expected. So trading a currency a few hours before the central bank decision is super risky and has nothing to do with the risk management and money management and opening what is more probable. And trading is the game of probabilities. Probably, if also you want to, you're trading just to feel the thrill, excitement, you can open this position and definitely will feel excitement a few minutes, few seconds before the decision and few seconds after that. But it's not about that. Trading should be emotionally free. There is no place for excitement. So that's why I'm not opening this position. Next one, New Zealand dollar to Swiss franc. This is an awesome setup because the price is going down, correction, down, correction, down, correction. And this correction is a flag, and flag ended with a head and shoulder pattern, and this is an awesome setup. Price broke the Fibo horizontal support, which is the neckline and lower line of the flag. Why I'm not opening this position here? Because I already have a short position on New Zealand dollar, so I don't want to double up my exposure on New Zealand dollar. I don't have to. If the New Zealand will be weaker, I will earn money on the other position. So why I have this gray rectangle here is because I was thinking about the correction equality pattern. Okay, fair enough. If there is no correction equality pattern, I won't force the price to make one. Maybe that's from the top of my head, but I guess this one is much smaller. Yes, so there is no point. This one is the biggest correction. Second one, last one. In the long term, price coming back below the red area, that will be an awesome sell signal. That is still a great sell signal anyway. And now my position. Oh, it's going fine. New weekly lows. Yesterday's upswing was a bit surprising for me, but anyway, let me describe the situation in the long term. In the long term, look, the price broke the yearly lows from this year, from previous year, and from the some point of 2016. After the breakout, the price created a inverse head and shoulder pattern. So this is the support and went higher. The thing is that the comeback was a bit surprising for me because it was deeper, but the price created a double top formation and came back below. So I opened my short position here. There was a comeback yesterday, very dangerous, but my stop loss was here. And the price created another false breakout and went back below this support. And now buyers are paying for that. Those who were buying here probably had stop losses here, and now they are activated, so they were trap traders, as I was on euro to Australian dollar, and the price is going lower. And this is an awesome trade in terms of the risk to reward ratio, because I opened my position here. Stop loss was like 36 pips. Potential profit for that is 130 pips. So 4 to 1. As for now, I'm earning 30 pips. If you have a big volume, that's nice. And 30 pips on this in this pair is quite a lot. So I'm looking forward for this kind of a drop. Currently, I could move my stop loss from here to here, or even above this those stops for break-even point. Because in my opinion, the price should continue to decline, especially like after two candles, H4 candles like that. That is an awesome selling opportunity, and that is actually a great long-term setup, because the price can fall even deeper, not to here, but at least to here, because that's also a head and shoulder pattern. Left shoulder head and a right shoulder on a weekly chart. And on a weekly chart, oh, this is such a powerful setup. Even like we can get a drop like this, 2,600 pips from here. Boom. We'll see. Once I will have my order on break-even point, I will not care, because this order will be protected. And I'm very close to move my order to break-even point. At the same time, euro to Japanese yen is still relatively high, so it's good. Next one is gold. Yesterday we said on gold that we're very close to the sell signal and the price is going lower. The thing is that it wasn't the best trading opportunity on the record. Why is that? Because the risk to reward ratio is bad, because the support is very close. So price selling here, you have a small take profit. I assume that many buyers will wait for a bounce from the 50% FIBO. Interestingly, we have a risk aversion right now due to the trade wars, and gold is not gaining. Gold is not going up. Something is broken there. As for now, I'm gonna stay away from this instrument. Australian dollar to Swiss franc. That was an awesome trade. So downswing, 50% FIBO and a horizontal support, boom, drop. Unfortunately, I was not there, and the price is going lower right now. Is going to this horizontal support on a weekly chart. That upswing was supported by those two hammers, but we can see that it's quickly denied. And here, breakout of the red line will be an ultimate sell signal on this instrument. That will be an awesome sell signal, like in the long term. Australian dollar to American dollar, triple bottom reversal, aimed this horizontal resistance, came a bit higher. I thought that they're gonna come at least to the black line, but they're coming back to the downtrend. And here on Australian dollar, that's also a great long-term setup. At least to yellow area, so you can still get like 460 pips. Why I'm not interested in that, because I have New Zealand dollar to American dollar and they're correlated, but selling here, stop loss 100 pips, take profit for even 500 pips. Potential profit is 5 times bigger than the potential loss. That is an awesome trade in terms of the risk to reward ratio, and you should always look about that. And that's a failed pattern as well. Failed false breakout above the resistance. That's a nice setup. Euro to Australian dollar. And dollar is getting stronger all over the market. Euro is a bit weaker. That as long as we stay above the orange area, we can say that buyers are still relatively safe, but the breakout of the orange area can be dangerous here and the price can go lower. British pound to Japanese yen. There is a well, I'm not gonna say what I think about this. I was going up here, I got stop loss here and the price went higher. Now the price making higher highs and high lows. The thing is that the instrument is very volatile. Obviously everybody knows about that, because British pound to Japanese yen is famous for its volatility. But from the technical point of view, I don't see anything interesting here. Silver, also a very bearish situation, especially here, like a long-term symmetric triangle. Bounce from breakout of the horizontal support, bounce from the horizontal support. Now the price is aiming lower. From the technical point of view, this is a very nice sell signal. On American dollar to Canadian dollar, I had a short position here. I closed that on break-even point somewhere here, a bit premature. Anyway, the price declined to 23.6 and reversed. Now the price is creating a flag. Flag is trying to break the horizontal resistance, so we may assume that this upswing will be continued. The thing is that still we do have this Bank of Canada soon, so watch out for this pair. But in the long term, this setup is bearish, especially after those two weekly candles. If you expect the price to fall, you can have a sell stop order here, which will be activated once Canadian dollar will get stronger. Boom. And that can be a very good trading opportunity in the long term, because breakout of this line will also increase the momentum, and we can come below the black line and the red line. Probably a lot of stop loss orders are there, and when they will get activated, the momentum will increase. Australian dollar to New Zealand dollar, that's not interesting right now. On a weekly chart, it shows us that New Zealand dollar can be a bit stronger than the Australian dollar. DAX, trade wars created a drop here. So actually the right shoulder scenario is probable again. That's a nice resistance here. Price coming back above the green resistance will be a strong buy signal. As for now, we are still in this head and shoulder formation scenario. Next one, American dollar to Japanese yen. American dollar is stronger, yen is weaker. We do have a... We are actually ahead of the major breakout. We are doing it as we speak. Price broke the horizontal resistance, two downtrend lines. Price making new weekly highs will be a super strong buy signal on American dollar to Japanese yen. Euro to British pound, the significance of this horizontal resistance is gone. It's no longer respected. So we do have this downtrend line and this uptrend line. Breakout of the lower line gives us a sell signal. Breakout of the upper line gives us a buy signal. Simple as that. Also, what we have here is a flag, lower upper line of the flag. So the breakout of the orange support and the lower blue line is more probable because of this flag, because this flag should continue this downtrend. Euro to Canadian dollar, also a nice setup, which is pointing south. So for a stronger Canadian dollar, downswing flag, we should get a downswing, but we'll see. It all depends from the Canadian dollar. So hawkish Canadian dollar will support trading signals from the very beginning. Apart from this one, hawkish Canadian dollar will deny this sell signal that we have. But hawkish Canadian dollar, Bank of Canada will support American dollar to Canadian dollar signal here, and will support this one as well. Nikkei made a false comeback above this horizontal resistance. We all know trade wars. This resistance is not respected. The green line is still, as long as we are below, the sentiment is negative. Australian dollar to Canadian dollar, here you can see this drop from overnight clearly. Head and shoulder formation, comeback test of the broken neckline as a resistance. Most probably will have a further drop, but I'm not the fan of the situation here. FTSE broke the upper line of the flag, went higher, but we had a horizontal resistance ahead. They were not able to break it, and now they're breaking the red line, and breakout of the red line will give us a sell signal. We have a potential target here on 38.2. What will happen after that, it's unknown. I don't think that the price coming here is an start of a bigger drop, but the price breaking the green area will be a start of a bigger drop. S&P 500 is still having a buy signal, even despite this drop. Well, we got used to that over many years. Good news is bad news is good news anyway. Bitcoin. Yesterday, cryptocurrencies were crushed. There is an ultimate resistance, midterm resistance for Bitcoin right now, $6,800. As long as we stay below, there is no buy signal here. But breakout of the orange line can be very positive for Bitcoin. Swiss franc to Japanese yen, waiting for a signal, breakout of the orange line, buy signal, breakout of the green line, sell signal. American dollar to Swiss franc, here you can see American dollar is getting stronger. This line is losing relevance. Here. That is a symmetric triangle right now. Breakout of this green line will give us a buy signal. Breakout of 23.6 will give us a sell signal. That's how we can trade American dollar to Swiss franc. American dollar to Singaporean dollar, head and shoulder formation, breakout, comeback. If you believe in this formation, you can go short right now, right here, right now. In overall, I'm not the fan of this setup. I would go short if the price would break the red line and this horizontal support here. So actually, I'm gonna delete this. Oil broke the upper line of the flag, went higher, but then reversed. So that can be the false breakout. We will see. False breakout will be estimated when the price will break the green area. Breakout of the blue area, will give us a sell signal here. And there is this ultimate resistance on oil here. That's WTI oil, by the way. So you can see, unfortunately, we do have very few trading signals. like this one, but I would be extra careful because of the Bank of Canada. This one is good. This one is good. This one is good but not tradable because of the risk to reward ratio. This one is good on silver. Here we will have a great signal once the price will break the red area. Here sell. And that's pretty much it. And here we do have a potential nice sell signal once we will have a hawkish Bank of Canada. So that's it, guys. Thanks very much for watching for watching daily analytical report. If you want more trading occasion setups, you have to visit our Twitter account and our YouTube channel and our website alpari.news. So thank you very much, and see you in half an hour. We'll have a webinar about MetaTrader 4. All the best.